Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So as Bitcoin teeters on the ledge again, let's take a look at several trend-based indicators and figure out if we can discern anything valuable. So in general, things have looked bear for a while, at least the past couple weeks, let's say 2 weeks. And higher time frames are starting to roll over in a super bear way, so that's not good if you're bullish. On the weekly, so I have 5200 looking at all the high time frames, and on the weekly support is at 3700 based on the 200 EMA. And if you just go down the line, you can see here's the 3-day. It's sitting at the 3-day right now. I don't like selling here, I like buying here because it's at support, but once support breaks, that's the sell signal. It would be the first cross that it's setting up for, bearish cross, since 2015, it's captured this whole thing. Go down to the 2-day, it already broke support, but it was pretty messy. For me, the deciding factor would be a bearish cross. And then if you go to the daily, this bearish cross has been on the money since the beginning of May. Nothing but doom since then. Arguably, we've had 3 drives. This is sort of like the 4th peter out drive. All of these have happened on declining volume except the last. So the 3rd drive, we'll say this is the 4th drive. Typically you get a bounce after the 3rd drive. You can see we're getting a bull div forming on RSI, bull div on volume. So what that means is all this is happening on less momentum, less volume. So we're getting lower lows with less momentum, so that's good. That says we're starting to end in the near term. So it's looking bouncy from that perspective, but it's got like 8 hours to close at least, and it's on high time frame supports right now. So if those start to go, that's all she wrote, I think. Here's weekly cloud. This is doubled. So you can see cloud wanted you in, for something. Even here was fine because it was a breakout. So 435 to whatever this was, 8K was the TK cross. So that's how you play that. We're still above the cloud. Cloud's bearish. So all of this is starting to look more bearish, obviously, if it breaks below the cloud. That's kind of like the last line of support here. One thing you'll notice with the cloud, all of the TK lines are super far away from anything right now, which means we're super oversold. You're not going to see that on RSI. We're oversold based on trend. In this case, based on 2017 trend, because the mean is all the way up here at 10K-ish. There's a long flat Kumo at 10K-ish, and we're starting to get this C-clamp forming, but it's a little too early to call a C-clamp on the weekly. Here's the weekly singled. You'll see the C-clamp even wider, and this is what you want to see. When I see this, I don't want to go short. The same, if I saw it up here, I wouldn't want to go long either. This just says the averages are way out of whack with where price actually is. And again, you'll see long flat Kumo, you'll see the cloud thin and non-existent. That just means we're ranging. So no surprises there. But also we're starting to break below the cloud. So you can't just get bullish when we're breaking cloud support. So your target, like I said, 10K here, it would be higher here, it would be 12K, 13K, whatever that is. That's the Kijun, that's the mean, based on the past 30 time periods. Here's the 3-day. Again, you're seeing C-clamp. Price is even far below the Tenkin, so the Tenkin is the faster moving average essentially. And when it gets farther and farther below that, just like it did up here, it's going to want to come back. It eventually wants to come back. So you can't be just baseline bullish on all this cloud picture, but you can say the averages don't like a short here because we're going to get a bounce eventually. The probability of a bounce is higher than everything just breaking lows based on what the cloud is saying. And your bounce targets would be the Tenkin, the cloud, and the Kijun. So again, 11K, You know, these are super far away at this point. Basically 50%, 50% move. Here's the 2-day doubled. Again, you're seeing EMAs or TK lines spread far apart. We're sold way off below the Tenkin for 2 weeks-ish now. Not more than 2 weeks. Almost a month. That speaks to a bounce. I'm getting excited because I'm seeing this massive cloud form, which is it's set up for an edge-to-edge trade in August or later. So that's something I'll be watching on the 2-day. Here's the daily cloud. One of the most stark examples of a C-clamp. If you don't know what a C-clamp is, just Google C-clamp. You use them in like workshops to like hold stuff down. There's one on my pop filter, for example, holding it to the desk. So that's what this is. And it says that reversal is a higher probability than continuation, but if continuation does happen, then that goes out the window. Or if this just goes sideways for a super long time, the averages will meet price, and then you can say there's a higher probability for continuation. When you see this, it kind of just says things need to chill out and return to the mean, go sideways, one of the two. But, you know, like there was the C-clamp here, and what do? We went back to the Kijun. There was a C-clamp here, we went back to the Kijun, there was a C-clamp here, we went back to the Kijun. You know, you'll see this again and again and again and again. That's why it's important to just recognize it, know whether it's more probable for a short or a long. Even like I was saying, we're far away from the Tenkin on some of these charts on the high time frames, like we were here, like we were here. Eventually those are going to want to return to some sort of mean based on probability over continuation. And then here's basically the daily singled cloud is the 12-hour doubled cloud, and everything looks more bear than anything else, just in the micro versus macro. So you can see the TK lines are close. We're snaking in between the Tenkin. We haven't yet hit the Kijun as far as like a Kijun bounce for the bear. These were two of the best examples I've ever seen for bearish Kijun bounces. So perfect on the wick. I mean, beautiful. This was similar. It was a little bit messy. You know, this was another example. That's what you want to see when you're for sure bearish. All hope is lost at that point for the bulls if we start getting Kijun bounces like that. Like I was mentioning on the other daily time frames, there is a bullish div forming, less volume, less momentum, lower lows regardless. So that's a sign for the bulls. Let me talk about another trend indicator I've been using more and more, mainly because it's quicker than the cloud. You can see the averages or the periods it uses are smaller. And essentially when it's green, pink, blue, that's bullish, and when it's blue, pink, green, that's bearish. Okay, so it sort of paints the trend. It's called the Williams alligator. And with that, you use the Williams fractals. And the fractals are sort of printing support and resistance. So as we get lows, we get a fractal. As we get highs, we get a fractal. And it's always lagging. So it's like printing 2 candles back, okay? The idea is you use the alligator to determine the trend, and then you use the fractals to determine the entry. So if we are in a bear trend, you're looking for bearish entries. It's automatically telling you do not long anything ever, just at baseline. Just like the cloud. If it's above the cloud, you're looking for longs. If it's below the cloud, you're looking for shorts. That's what the cloud is telling you. So this alligator is telling you on the weekly since it flipped over, whatever that was, 80 to 8900, I don't know. You should be looking for shorts, not longs. There hasn't really been any entries until this on the weekly, so this week. So depending on how you want to play this, you can either play it on an entry based on the candle or the body of the candle. It's always best if you wait for the body of the candle. So the first technically weekly bearish entry would be this week if we get a close below this fractal. And that's super slow, but it's on the weekly. Obviously, you've missed all this. But that's just looking at all these time frames. That's just one way you can play this. So if we go down a little bit, we go to 3-day, you can see what is the trend telling you? Bearish. You should be looking for shorts. Where's the first bear fractal? Here. Where's your first entry then? It would have been here. So the idea is on these entries, you use the same size every time. So pick your stack divided by 10, whatever you want to do, whatever your risk appetite is, and then you just make the same entry every time. So maybe this is a 10K short entry, and this next one's going to be a 10K short entry, if we break it. So we haven't yet. Again, this speaks to the averages on the 3-day and the 2-day, the 200. We're right at support. And a short signal would be breaking this low, which isn't like rocket science for anybody, but that's one way you can see it. Another thing you'll notice with these, just like the TK lines, when price gets super far above or below, it's going to want to return to this red line, which is basically the middle, median, or mean, whatever you want to call it, of the trend. And your stops for these trades are the bull fractals. So the stops for this trade would be 8,200, or whatever this is here. If we keep going, you can see same story on the 2-day. Your stops would be a little higher, 7,700. If you go on the daily, daily's pretty interesting. It's been bearish for a long time, and there's been many entries. So there's an entry on this candle, there's an entry on this candle, and if you get multiple fractals without an entry, you just move your entry up or down. So you're not getting an entry on this one, you get a fractal here, and then you get an entry here. You can see the stop was here the whole time, didn't break that stop. So we go down, we're getting an entry signal potentially if we break this low with a stop at 68.50. So it's generally pretty clean because it's so quick on high time frames. On low time frames it gets pretty messy, but you can also watch it. You know, I watch it on the 15 minutes sometimes. And then lastly, we're talking about trend. This is probably the most significantly bearish thing that I can find. We're kind of stuck in this bearish pitchfork channel, and it says unless we break out, we're going to hit the median line eventually, just like the same rationale for hitting the Kijun on averages. It just happens every time, eventually. Okay, so we're going to eventually hit this. Where it's at right now is 5K, 4,900 basically. As this goes lower, that's going to change. It's going to go lower. So it's something to watch for. If we break this diag, there's a high probability we're going down. If we break this diag that says the veil of fog is lifted and we're all joyous again, but until then it's pretty definitive that it's been in this channel. It's going to stay in this channel until it wants to get out of this channel. So that does not look bullish. That's all I have for you on this one. Like, dislike, comment, share, subscribe, hit me up on Twitter, and happy trading.